Hi, this is Simon with Trade and Perform Coaching. This is a trade review for Wednesday, July 3rd, 2013. Before we start, nothing in this video, on my blog, or in the charts that I post should be construed as trading advice. Trading futures is extremely risky and you can lose your entire investment. You can actually lose more than your investment. This is purely for educational purposes. So let's get started with some basics. First, the white zone. White zone determines control. Buyers are in control above, sellers are in control below. The most conservative approach to this aggressive trading style using these zones is to only trade in direction of control. That means when buyers are in control, I'm only looking for long trades. And when sellers are in control, I am only looking for short trades. However, there is an aggressive way to trade this, and that is to contra trade control. Again, that is more aggressive. The trades do have a high win rate. However, you have to expect to have more stops when buyers are in control and you're shorting, or when sellers are in control and you are buying. In addition to that, the way that the zone comes in very happy is, let's say you're not interested in contra trading. However, above the white zone, what will often happen on trend days up is less experienced traders will constantly try to find good short entries. And while occasionally that works, as you can see here to the downside moves, what happens is usually you end up in a series of stops and you constantly short, cover, short, cover, short, cover until your account's in quite a significant hole. By knowing who's in control, you can determine when it's best not to press your shorts or when it's best to press your longs. I have 4 or 5 different strategies that I use off of this particular zones, and for the most part I both contra trade control and trade with control. However, the majority of what I try to express to traders is first master one type of trading, get very good at it, build your account, and then once you've put some cushion in your account, then get more aggressive from there. So that would be my coaching tips as far as using the zones. Now let's talk about the open for a moment. We opened just below the 1600 to 1602. They responsive buyers tried to push it up, and they did into the 1600 and a half to 1602.50, where we found responsive sellers right out of the gate. And within the first 3 minutes, they were able to push it down and beautifully right into the top of the white zone and right down into the middle of the white zone as well. Now, you'll often see in my Twitter account that I post the highest odds location for a trade is from middle to back of the zone. And on the white zone, when I post my spreadsheet, which I'm dreadfully behind on and working to catch up on, you'll see that my model is based on when I take those trades from the front of the zone. So as you can see, from the front of the zone, with specific reference to the white zone, from the front of the zone on first touch, easily yielded you that 8-tick target that I'm so often talking about, and actually had a potential move from the middle of the zone from 1597.50 all the way up to 1604. So potential of 6.5 points, 7.5 points worth of move up. Now let's take a look. I did have several people contact me and said, well, I took the contra short right here in the middle of the back of this 1600 and a half to 1602.50 zone. And let's look at that for a second. Now, first of all, with a reasonable stop, which I'm always talking about, behind the back of the zone, this trade worked. We actually came around and rolled down for a second touch of the white zone. And it did provide you with your 8 ticks worth of profit. But let's look at this from a risk-reward standpoint for a moment. Shorting the middle to back of this zone was very aggressive. Why? Because the white zone is right below, and I expect responsive buyers to materialize and at least attempt to get a bounce in each and every time we get to the white zone. And a support resistance zone, especially a strong one like the white zone, is is strong until it is broken. So again, I think the risk reward was rather limited here, even though the trade did work. We could have easily just simply pulled this little trade movement here, and I think we had a lot of this going on because there just was a thin market and it was easy to push the market down. I think on a normal day, a non-holiday day, we probably would not have seen the second rotation lower. So coming in, as you can see, the front, middle to back of the zone worked beautifully here. When we came back up again, I was not eager to take a short in the middle to the back of the zone here. However, on this second push down here, again, offered excellent trade location. And you'll often see me say that I'm cautious on the second touch in, that each subsequent touch after a zone has been tested the first time reduces the odds of a successful trade higher. However, it does not eliminate the opportunity to have a successful trade higher. You simply have to know that your odds are going to be lower, and if you can tolerate more stops in your trading and keep a calm focus, second touches are fine. I focus primarily on the first touch of a zone. So as you can see here, this is the first touch of the zone, and as is normal, we did get the rotation lower back into the zone on the second touch. I was all wrapped up here. I completed almost my goals for the entire day. On this move, at least with regards to the strategy, on this move back up, as you'll see, the second move into the zone resulted in a pause, but not much of a pause. And we went ahead and rotated up to the front of the 1604.5 zone, which for me, had I shorted here, would have resulted in a stop. I keep a 2 to 3 point stop, and again, this would not be a trade that I would have taken. Now, again, the middle to back of this zone with buyers in control, all it did was cause a pause as opposed to getting a successful rotation down, and that's part of the risk that we take when we're contra trading against control. You'll see that another feature here was that we consolidated for a long time in front of this zone, and we built a bunch of steam. So whichever way this broke here was going to have a lot of power behind it, and you'll see that while the zone, the 1604.5 to 1606.5 zone, did hold it for quite a while, we were eventually able to bust up higher towards Globex high. Now, a lot of people like to attempt to short Globex high. Again, buyers were in control. It's a thin day. It's a Friday. You got to think there's just not a lot of power in there to fight the market. And what I really would have liked to have seen on a push higher would have been tick divergence here, and we simply just did not get tick divergence in this move up. As a matter of fact, we set new tick highs on the day, as you can see here. However, on the push through this area, and you'll see I wrote earlier in the day, this has been a difficult area to start a position for the last few sessions. Caution. Okay, and what that means is I'm not automatically taking the trade in this zone. However, if you'll look right here, and this is a 3-minute chart, you didn't even need a 1-minute chart to see it. We had tick divergence right here as we were setting new highs, and it set up a beautiful trade to the short side. We didn't quite get to the middle of this zone, but you could just see it pause, and if you looked in the dome, you could see it pause. It almost sat there, as a matter of fact, right here at this level. It was roughly 1613 that it just parked itself for about 5 minutes. Was unable to push higher. We had good tick divergence on new highs, and we did get a rotation down easily for 8 ticks, and eventually from 1613 all the way down to 1608.24, almost a 5-point trade to the downside. And then we went ahead and we just kind of chopped here into the close, closing at 1610. So that's basically how the day went. I repeatedly gave hints within my Twitter account that buyers were in control, was not overly eager to look for short positions. It's a holiday. Markets tend to get bought up in front of holidays, particularly in up markets and in bull markets. And even though we have had a correction, a good correction off the highs, we still have to consider ourselves in a bull market. We certainly haven't gotten crushed by any means. Looking at today's trade briefly, what you'll see here in the overnight was that they were able to drive the market higher once again. This zone has become resistance right here. overnight, and will be kind of the litmus test for getting up and over, and kind of show you this area right here. Basically from roughly 1621 up to 1623. A break above would leave buyers still in control. A break below, and I would expect to move somewhere between 1615 and 1610. I would expect we're going to come in and test the 1612 right to the top of the 1612 somewhere overnight if we get some downside relief. Below this 1610 area right here that we rotated up to, and sellers would really gain the upper hand, and we could possibly test back down into these zones right below here, roughly 1604 to 1606, and then back down to this 1596 to 1596, 1598 area would become pretty important for buyers to hold. If we got all the way back down there, again, that would be an incredible rotation lower. I wouldn't anticipate that happening tonight unless something crazy happens in Cairo or something to really spook the markets. And I anticipate that tomorrow will be rather thin. So that's my trade review. Again, you have to focus when you're looking at your account and looking to build your account, okay? You have to, first of all, if you want to correct what's going wrong, you have to have some type of strategy to begin with, an actual trade plan. You want to make sure that your trade plan actually has an edge. And whether that edge is you're trading stochastics, MACD, moving averages, whatever it is, you need to know that you have a high rate of success. Unlike swing trades and stock trading or position trading within a portfolio, in day trading, precision placement of a trade is everything. You'll simply have too much leverage, too much volatility, and you get chopped up really quickly. You add that to the psychological environment of not knowing your plan solidly, the fear that enters as a trader will cause you to do the exact wrong thing at the exact wrong time, which is why so many traders end up high printing trades and low printing trades and panicking out of positions at the exact wrong place, or simply becoming a deer headlight and insisting that the position is correct as they take huge drawdowns, either in a short position, in a long position, and none of that is necessary. Through proper training, through verifying that the edge that you're using, even if you're not using zones or support resistance areas, you're using stochastics or MACD. There's all kinds of ways. Even I've seen people successfully use Fibonacci trading ES. Everything has an edge. You have to know what that edge is and how successful. Generally speaking, I believe you have to have over an 80% success rate. I think that's the hurdle to be successful in day trading. I think that hurdle rate is much lower for swing trades, and that you can have a much easier time. However, my focus and the focus of my training has always been to find one or two high odds trades, build an account over time, and as you're building that account, increase your trade size. And that goes against all the rules in trading. I realize that, but again, I know my odds, I know my focus, and I'm able to exploit that with confidence because I do the exact same thing almost each and every time. And if it stops working or it becomes a problem, I identify it quickly via use of using spreadsheets and reviewing my charts carefully along with reviewing my trades. And if I start to take losses, I stop quickly. As a matter of fact, my general rule is not to lose any more than what my average day up is, because I don't want to work any more than one day for free. And when you bury your account, you have to work multiple days for free, sometimes for weeks, sometimes for years. Simply not necessary. So I hope this helps someone out there. I hope everyone had a very happy 4th of July. I will be in tomorrow. I will have my charts posted. I don't know that there'll be anything to do, but the volatility and the movement in the market is certainly nice, and I would like to take advantage of it while it is available, because it is summertime and it can die any day. So be safe, enjoy your family, be grateful that we can do this for a living. It's really a wonderful blessing, and take care out there. Have a good night.